In Europe, stocks traded higher today as investors digest the latest news regarding the coronavirus outbreak and efforts to ease lockdown measures. Conrad Burson joins us now from the Frankfurt Stock Exchange with more headline news. Good afternoon, Conrad. It's good to see you. So stock markets managed a slight gains this Thursday ahead of the new unemployment data from the United States. Tell us, what's the latest on the trading floor in Frankfurt?
Well, just a couple of minutes ago, the numbers came out from the U.S. labor market. That's the first time applications for unemployment benefits during the last week. And the number is 3,169,000. That's how many Americans applied for unemployment benefits last week in the U.S. And I guess one of the very few positive things in terms of this large number is that it's not another shocker, at least if you take a look at the stock market reaction here in Frankfurt. No slump of the German share index DAX, despite the fact that, again, more than 3 million Americans have applied for unemployment benefits, which means they lost their jobs in the course of last week. I took a look at the numbers of the last few weeks in America, how those first-time unemployment benefit applications have developed in the course over the last few weeks, and I found, which I find interesting, that the last time that this number in the US was not in the millions was 7 weeks ago. On Thursday, the 19th of March, this was when a number of 281,000 new applications had been reported, and at the time, pundits and people on the markets talked about the strong increase of that number to 281,000. But since then, every week for 4 weeks, this number has been in the millions. And as I said today, it's again more than 3 million. So the situation in the United States on the labor market is really a catastrophe.
Oh, Conrad, yesterday, the German factory orders were updated. Today, an update of Germany's industrial production came in. Tell us, how big was the slump in March? And our investors have been hoping for a rebound during the current month of May.
Well, the biggest slump on the record. That is what our statistics office has reported today. The decline in industrial production in March was 9.2% month on month. And if we look at the performance on the year in terms of industrial production, the decline is nearly 12%, the biggest slump in the history of German industrial production numbers. Of course, now everyone here is hoping for a rebound now in May, now that some of those restrictions, those lockdown restrictions, are being eased, not only here in Germany, but also in many other countries that our economy and our businesses are doing business with. But I have to say, if you talk to people here, the discussion is very heated, whether we can really get prepared for a V-shaped recovery, or even a U-shaped recovery, which would be a relatively strong recovery. It's not only very difficult to predict how the positive impact of those easing of the lockdown will be. It's also impossible to predict right now what the impact of all this crisis will be on sentiment, on the willingness of decision makers to invest, to start to spend money again. We're talking psychology here. The corona crisis is really a big exception for all of us, and the exceptional impact of it on the economy in the mid and long term is very, very difficult, if not impossible, to predict.
But Conrad, reserve banks all over Europe are doing what they can. In Switzerland, for instance, the currency reserves of the central bank have risen to a stunning 800 billion Swiss francs, which is about 760 billion euros. The Reserve Bank is buying foreign currencies in order to keep the local Swiss franc cheap. Isn't this currency manipulation?
Well, BC, it's not according to the rules of the International Monetary Fund and according to the World Trade Organization. You know, the problem for Switzerland is that the currency not only reflects the competitiveness of the economy, It's not only an exchange rate between countries. The Swiss franc is also one of the major reserve currencies of this world. Despite the fact that, of course, the famous secrecy rules at Swiss banks have been lifted in recent years, the Swiss banks are still the number one destination, or at least one of the few number one destinations for rich people and also institutional investors to put their cash when times become difficult. And this huge inflow of foreign currency and foreign money into Switzerland has an impact on the Swiss franc's exchange rate. And that is, if we didn't have those interventions by the Swiss National Bank, the Reserve Bank there, then parts of the economy, everything that's not related to finance, would basically be destroyed. That explains those interventions by the Reserve Bank. But of course, you're right to ask the questions. The rules by the IMF, the International Monetary Fund, and the World Trade Organization recently have been put more and more into question, namely by people like the US President Donald Trump. So people here I talk to on the trading floor predict that as soon as this crisis starts to ebb and starts to go away a little bit, it's likely that we are going to have this currency manipulation discussion again.
We'll see if that happens. Thank you, Conrad, and we'll see you again tomorrow.